Welcome everyone to the CFO Swinger Watch Report's technical analysis video for the week of August 12th through 16th. Now, before I begin, make sure you guys are always reading the report first before you watch this technical analysis video. Remember, I have way more details on what our swing trade ideas entail for this week. For example, I provide the exact option contracts that we need to be looking to execute on for each swing trade idea, or the exact 3-point game plan for each swing trade idea using equity. And that's just a small snippet of what the weekly report says. So make sure you guys are not only watching the technical analysis videos. With that, let's take a look at the markets. So try not to be inundated by all these lines that you see on the weekly time frame for the S&P 500 chart or ticker symbol SPY, as I will kind of go through the significant levels that you guys need to be focusing on this weekly time frame chart. So last week, we had a pretty amazing week, to say the least, because if you take a look at last week's close and take a look at last week's close, we've only had a difference of 9 cents. That's right. So last Friday we closed at 532.99, and then last Friday we closed at 532.90. So with the difference of 9 cents, last week's price action clearly tells me that the markets are saying or telling us that, hey, there really is not much to see here. We just essentially ended up closing right back where we were last week. So let's get a move on to what could happen in the near-term future. And that is a potential intermittent bottom. Now, why do I believe that there is an intermittent bottom in the near-term future? Well, first of all, okay, let's make it very simple here. We had a pretty textbook correction from all-time highs. So if we take a look at the percentage move down, we've essentially had around a negative 9.70% move to the downside. And that falls within the range of a textbook correction of 5% through 10%. And if you guys remember, we've had a textbook correction back in April as well. The first few weeks of April, where we saw a nice negative 5.90% correction. And so this looks very similar to what we're seeing now, except obviously it's a larger correction to the downside, and a bit more rapid one at that as well, due to all the different news and catalysts that came together, amalgamated together to give us a very rapid sell-off to the downside. And so I truly believe that with this textbook correction of negative 9.70%, which again falls within that range of a textbook correction in percentages, we have found an intermittent bottom. Now, another reason to be looking for an intermittent bottom in the near-term future is that, well, on the weekly time frame, my weekly 21 SMA, which is my light blue line here that I'm tracing with my cursor, we were able to close above this weekly 21 SMA. Now, if we didn't close over this weekly 21 SMA, I'll be saying something completely different. I would say that the markets are still in trouble, and if you aren't able to close back up over this weekly 21 SMA, then sellers are fully and still in control. But that is not the case. The bulls were able to continue to push up higher and higher for all of last week. I repeat, all of last week, from the lows, from the opening lows of Monday's price action, and we're able to close near highs and over this weekly 21 SMA, right? And so now, what should we expect for this week and possibly for the next 2 to 3 weeks, specifically in the next 2 weeks? So with the fact that the price has closed over the weekly 21 SMA, the next thing that the price needs to retest is the weekly 10 SMA or this red line that you guys see here where I'm tracing with my cursor. And so with the fact that the price has rapidly moved down, but at the same time has rapidly recovered due to last week's price action, I am going to expect the weekly 10 SMA rather to flatline and slightly curl down. And once it starts to curl down, I would expect the price to retest with the weekly 10 SMA, but at the same time coincide with the very major whole number level of 540. Okay, so this is a major level that we need to be looking out for in the next 2 weeks. Okay, so again, I want to see the price coinciding with the 540 whole number resistance level and the weekly 10 SMA as it flatlines and slowly curls down. Now, for the actual retest of 540 and this weekly 10 SMA, the reason why I said around 2 weeks is that for this week, I really wouldn't mind if we had an inside weekly candlestick, especially if the volatility index of the S&P 500 or VIX continues to crunch lower, especially again if market vol is crushed. And that would also provide an opportunity for the bulls to start consolidating the price, as again it had a very wide range last week, and that was due to the bulls just bidding the price up higher constantly for all of last week. And so it'll be amazing to see an inside weekly candlestick for just this week as you stay within the lows and the highs of last week's candlestick, so that we can provide a great foundation for the second week after this week's consolidation to provide that nice jump up higher to this 540 whole number resistance level and a retest of this weekly 10 SMA as well. So if we do get that inside weekly candlestick, again, in 2 weeks from now, I will want to see a nice retest of 540 and the weekly 10 SMA. Now, of course, if that does not happen, okay, I would just expect to see a high of a 536.50 for this week. So if you go now to the daily time frame, okay, there is heavy area of supply once we hit 536.50. Okay, there's a big area of supply from 536.50 to 540. And if you guys see back here, that was also kind of the area, this gap up area that we saw from June 11th to June 12th. I mentioned this area multiple times. And also it is now a gap down area between August 1st and August 2nd. So the price will obviously make sure that this gap down area is a lot more significant and important compared to this gap up area from a couple of months ago. All right. And so with that, let's take a look at our first swing trade idea for this week, imax. All right, so now you guys might be thinking, this is a very unconventional name. So we're looking at a movie name, right? A movie company name, imax. And this one has been making an amazing breakout uptrend. And in fact, its counterpart, okay, CNK, or as you may all know, Cinemark, right? If it loads here. So Cinemark Holdings has been doing phenomenal, right? It's been doing absolutely phenomenal. It's been moving completely inversely to the overall markets. It's kind of been acting like a defensive name, to be honest, compared to the markets. And so if Cinemark has been just bursting to the upside with awesome bullish momentum and bullish volume, then its counterpart imax can most likely do the same. And so IMAX recently had earnings, and due to earnings and thanks to earnings, it found itself in a nice breakout. But before the actual breakout due to earnings, the price was already showing signs that it was ready to break out. Now, in the perspective of this descending resistance trend line. So in this week here, right, so in these candlesticks, so around, I would say about 5 candlesticks here, so 1, 2, 3, 4, 5, this little rectangular box of daily candlesticks have shown the price to want to break away and eventually move away from this macro descending resistance trend line. Now, the reason why I say it's a macro resistance trend line is that you can clearly see it on the weekly and the monthly time frames. And so from this daily time frame perspective, we have a very nice volume-backed run-up to the upside due to earnings, right? And then we're seeing a very low volume, very rapid low volume, declining volume consolidation as we slightly pull back. Now, this is a very slight pullback because at the same time, we are starting to see some inside candlesticks forming. We saw one last Thursday, and that's indicative of a potential continuation to the upside, but not before we see a very, very short phase of consolidation. And what is this consolidation for? Well, it's to wait for my short-term momentum SMAs, which are my daily 10 and daily 21 SMAs. So obviously, just from observation here, we see that the daily 10 SMA has fully caught up, but now the price is starting to consolidate within the area between the daily 10 and daily 21 SMA, which is now slowly starting to catch up to the price. And that's the reason why we need to be seeing an intermittent but short-term consolidation phase as the daily 21 SMA slowly curls up higher to meet up with the price. And that's the reason why I'm looking for an entry point, a bounce entry point at 19.50. Or if we decide to move slightly lower, there is a chance that the price might want to retest the earnings day's lows. Right, so the lows was at 18.86 on this day. However, I do not want to see a lower low forming compared to the earnings day's lows. So $19 as a whole number is a perfect area for bulls to try to defend. But again, I really do not want the price to come all the way back down, because that would truly indicate that bulls are kind of out of this name and bears are slowly coming back in and taking back control. So for IMAX here, this 19.50 level will be pretty critical for our bounce entry, and we need to be looking at this with some good eyes. So make sure you guys have your alerts set up at this 19.50 level, and also watch out for the daily 21 SMA as it continues to creep up higher. Now in the weekly time frame, it looks even better. Why? Because of this very, very nice and large breakout from this previously mentioned macro descending resistance trend line. And so if we continue to flag out here, so I would assume to see something like this, okay? Something very similar to that. We should be able to see a very nice textbook breakout from a presumed bull flag. All right, so again, IMAX, very, very, very strong name, just like its counterpart CNK, ticker symbol CNK, or Cinemark Holdings. And this one should continue to have some very, very relative strength, very great relative strength at that, compared to the overall market. Now, if you guys want the official price targets and stop losses, make sure you guys go back to the actual CFO Swinger Watch report to get all the juicy details on this ticker and swing trade idea. Now, last but not least, we have ticker symbol LNG. Now, this one is clearly and purely a defensive play. Why? Well, first of all, this is a oil name, right? This is involved in the oil and gas industry. Specifically, this company is involved in the midstream stage of oil and gas. And so LNG here, first of all, I mean, just from a technical perspective on the weekly time frame, what do you guys see? Well, for me, I see a blue sky breakout potentially about to happen and occur for this name, a blue sky breakout. And you might be wondering, wait a second, in these market conditions, a blue sky breakout? Yes, that will be my answer to that question. We are about to see a blue sky breakout on this ticker. So what we see here is a massive weekly resistance level at 184.50, and we also see a very nice ascending support trend line. So from a macro perspective, we could be seeing just a very simple macro, very large, gargantuan bull flag. There's no other way to describe that, right? With all my words that I'm using and adjectives. So this is a very nice bull flag here, obviously, but if we just focus on this weekly level here of 184.50, you can clearly see a potential entry point, a breakout entry point over 184.55. And once we're able to see some very bullish momentum coming in and volume coming in, then we can see the floodgates opening for all the bulls to come in, to have a rapid move up higher to make new all-time highs. And new all-time highs isn't that far away, because the all-time high price was 184.62, which was reached about 4 weeks ago, including last week. Okay, so on this high of this weekly candlestick. So it's only well, it's very close, and it will be very close once we do get an entry point over 184.55. So again, we just want that confirmation over this 184.50 whole number level. Now, if you go on the daily time frame here, okay, we can clearly see that this name had earnings very recently, and due to earnings, we're able to see a very nice jump up back to the upside and a third retest of this 184.50 level. Now, it's very recent that we've had the first and second retests. So again, at these two candlesticks. And so last Friday was our third official retest, which means that either on the fourth retest or the fifth retest, we can be seeing a nice breakout over 184.50 and eventually to new all-time highs, giving us that overall blue sky breakout uptrend. Okay, now I love the fact that we're also seeing the daily 10 SMA crossing over the daily 21 SMA, which officially gives us that bullish crossover confirmation that's basically saying that, hey, the short to mid-term momentum is to the upside and bulls should be in control during that time. Okay, so this oil and gas company specifically that works with the midstream stage of this industry is doing absolutely amazing, and just overall the energy sector has fared fairly well compared to the overall markets like the S&P 500. So if I just give you guys a quick look at XLE, you can clearly tell that compared to the S&P 500 on the daily time frame here, compared to XLE on the daily time frame, XLE basically didn't go anywhere as well, except the depth of its pullback when the markets were showing extreme amount of selling was very weak, right? The sell-off in XLE was very weak, and we have basically recovered nearly 50% of this move down. Okay, so LNG is purely a defensive play, as it's also involved in the energy sector. All right, so that is it for this video. If this TA video was very insightful, make sure you guys leave a like down below. And if you're new here and if you aren't subscribed yet, make sure you guys hit that subscribe button. On top of that, the notification bell so that you guys know when I am live on Tuesdays and Thursdays and when I have uploaded a new video. Good luck, and I'll see you all tomorrow morning.